Okay, previous class we started the concept of sweat equity shares. I have explained clearly what is the meaning of sweat equity shares. Sweat equity shares are the shares which can be issued to directors, employees, or any other key managerial persons who are supplying the technical know-how or intellectual property rights or anything which can give the value addition to the company. Now shares issued to these persons can be issued by company at discount also, or at par also, or at premium also. This depends on what requirement and wish of the company. Okay, so you understand what is the meaning of sweat equity share. Now we are going to start the journal entries when sweat equity shares are issued. Okay, now concentrate. When sweat equity shares are issued at discount to employees or director for cash, means sweat equity shares can be issued for cash also, or it can be issued for other than cash also. Other than cash means company is not receiving cash, company will receive any valuable input from the employee. Means company issue the shares and in return company will not receive cash. That's it. That is called as other than cash. If company receive the cash and company issuing sweat equity shares, that will be called as issuance of sweat equity shares for cash. Okay, so this is the first scenario. When sweat equity shares are issued at discount to employees or directors for cash, first entry will be bank account debit to sweat equity share application. Journal entry is same, only here sweat word will come. Previously you understand, whenever amount received by the company, entry will be bank to share application. Same entry will be coming here, only here sweat wording will be added. Next, this sweat equity share application money will be transferred to share capital. So suppose 10 rupees share company has issued for 8 rupees. 10 rupees share company issued for 8 rupees. So here journal entry will be bank account debit 8 sweat equity share application. Then sweat equity share application 8 out of 10, 8 received, so 2 rupees discount given. So discount will come here, so equity share capital 10 will come. So balance sheet share capital will be disclosed 10 rupees only, but asset side generally we have to disclose 8 rupees only in bank account. This 2 rupees discount given will be subtracted from reserves and surplus. Okay, so journal entry will be passed in this way. Bank to sweat equity share application 8 rupees was 10 rupees share issued for 8, so 2 rupees discount given, only 8 received. Then sweat equity share application 8 discount 2 to share capital. This is the journal entry. Sweat equity share is issued to employees or directors for cash. For what? Cash. Now sweat equity shares issued for cash, and when it is issued for discount, what will be the journal entry to understand? Now if sweat equity share is issued at par, okay, for technical know-how or intellectual property right, it means company is not receiving any cash from the employees or cash from the particular person. They are not receiving any cash. They are receiving any technology, they are receiving any intellectual property rights, they are receiving any value addition from the employee. So in that case, what they are receiving, benefit, what benefit they are receiving, that benefit will be debited. So that is technical know-how or intellectual property right, this account is debited to equity share capital. This is the journal entry relating to when sweat equity shares put at par and cash is not received. Cash is not received. Understand? So note this. Note these two journal entries. Just do it fast. Note this. If you have any doubt query, I will repeat one more time. Otherwise, I will proceed for the next explanation. Okay. This is basic foundation level chapter. Examination point of view may not be very important, but this foundation will provide basic terminology in company accounts. From this terminology only, you can understand remaining subject in perfect way or in perfection. Without this base, you will not be confident in further topics. That's why my suggestion is don't miss any class, attend regularly, learn each and everything. Even it is not tested in exam also, it will give the basic level understanding in further topics. Okay. You'll note this. By sweat equity shares means shares issued to employee for supplying the intellectual property rights or technical know-how, or sometime this will be issued to employees at discount also. Sometime it will be issued to employees at par also. If shares are issued to employees at discount and in return they are receiving cash also, his employee is not giving any value input, only is giving services. Like you are working in one organization, you are rendering services. Okay, from past 5-6 years you are rendering services by. So by keeping this point in mind, company decided ki whenever shares will be issued in public, a special discount will be given to our employees so that our employees can buy these shares at discounted price. So in that case, if employee is purchasing the shares at discounted price, company receiving cash but less than the face value company receiving. So in that case, what will be the journal entry? Company receiving cash, 10 rupees share suppose issued for 8 or 100 rupees share issued for 80. Okay, so entry will be bank account debit to equity share application. How much company received? 8. So 8 will be debited. Now 10 rupees share issued for 8, so 2 rupee discount. So next entry when it is transferred to share capital, so equity share application debit 8, discount on issue of share debit 2, to equity share application 10. This is the entry. Suppose from employee, company not receiving cash because employee giving one technology sharing, one valuable input sharing to the company, one very important information employee sharing to the company. So in that case, company will not receive cash. Okay. So in that case, if shares are issued, entry will be technical know-how. So this is company receiving, so that is debited. Or intellectual property right, this is company receiving, that is debited. To equity share means you have to credit. So these two entries will be required. Okay, to equity share capital, right? So ultimately this is transferred to share capital now. So entry will be technical know-how or intellectual property right debit to equity share capital. Now understand? Understand or not? The student who asked the query, now it is clear. Okay, please note this, and once noting is completed, message. Once this is noted, send the message, then the next point. Next, now already this is explained where this will be disclosed. Discount on issue of shares will be debited to P&L or it will be generally deducted from reserves. So discount on issue of equity shares debited to P&L or it can be adjusted from reserves also, right? Generally it is preferable to debit to P&L. Next, one example we have to understand now. See, past journal entries in following alternative cases. Concentrate properly. 5,000 equity shares of 10 each fully paid were issued to employees free of cost for providing know-how. So this will be debited to equity share capital. So know-how account debit 5,000 into 10, 50,000 to equity share capital 50,000. Know-how account debit 50,000 equity share capital, right? Very simple. Because no amount is received free of cost. This company received is debited to equity share capital, it is credited. Next, 5,000 equity shares of 10 each fully paid were issued to employees for providing know-how for consideration of 2.5 per share. It means actually 1,000 rupees shares company issuing to employees, but company receiving 2.5 per share only. So it means 5,000 into 2.5, company has received 12,500 rupees. So remaining 37,500 will be technical know-how. This is bank cash they are receiving. This is technical know-how. Okay, entry will be bank account debit, technical know-how account debit. Okay, first know-how they are receiving now to equity share capital. So bank account debit 12,500, technical know-how account debit 37,500, share capital 50,000. This will be the entry. Bank account debit 12,500, know-how account debit 37,500, equity share capital 50,000 rupees. This second case. Okay, right, sir. Understand now? Now third scenario. 5,000 equity shares of 10 each fully paid to employees for providing know-how, priced at 9 per share for consideration of 2 per share. Okay, so 10 rupees share they are issuing for 9, means 1 rupee discount is offered to them and they are receiving 2 rupees only. So it means bank account debit 5,000 into 2, 10,000 rupees they are receiving. Now discount debit 1 rupee discount is given, 5,000 into 1, 5,000. Technical know-how debit, okay, 35,000, because 2 rupees consideration they are receiving, 1 rupee discount they have given, so it means 3 rupees completed. Now 7 balance, so 5,000 into 7, 35,000 to equity share capital 1,000, to equity share capital 3,000. Bank debit, discount debit, technical know-how debit to equity share capital. Bank account debit 10,000, discount 5,000, know-how 35,000, equity share capital. Okay, right, sir. Next scenario. 5,000 equity shares of 10 each fully paid were issued to employees for providing know-how, price 9 per share free of cost. So 10 rupees share they are issuing for 9. Very simple. Any amount they are receiving, no, free of cost issue. So technical know-how debit 45,000, discount debit 5,000, equity share capital 50,000. So 10 rupees share they are issuing for 9. For that, they are receiving technical know-how. So technical know-how 5,000 into 9, 45,000. Discount 1 rupee, 5,000 into 1, 5,000. Equity share capital 5,000 into 10, 50,000. Entry. Discount 5,000, know-how 45, equity share capital. Okay, right, sir. Next is 5,000 equity shares of 10 each fully paid were issued to employees for providing know-how free of cost for 110 per share. Means 110 rupees they are receiving for to the employees for providing know-how free of cost, priced at 110 per share. So 110 rupees share they are issuing to employee at free of cost. Okay, so free of cost they are issuing here. So free of cost issuing means technical know-how will be debited. Technical know-how debited to equity share capital 10 rupee share. So 10 into 5,000 to security premium, because at premium it is okay. At premium means premium value. 100 rupees into 5,000, 100 into 5,000. Here. So ये है लेवल, ये 110. 5,000 into 110 per share. Priced 110 है ये, but actually 11 rupees होना चाहिए था. 11 per share होना. 11 per share. 11 per share means this value will match. Here, see here. Once again I will explain. This is typing error, not 110. This is 110% कर लो नहीं तो, right? So 10 into 110% means 11 rupees हो जाएगा. So technical know-how account debit to equity share capital 10 into 5,000, 50,000. Security premium 1 into 5,000. 1 into 5,000, 5,000. Debit 55. Right? देख लो इधर. Know-how account debit 55. Share capital 50. This is 110 per share नहीं है, 11 per share है. Okay, 11 per share. Here, right sir. चलिए, so copy this question also and answer also. Copy this. 110 या 11 कर लीजिए इसे. Not 110, 11 rupees. 11 per share. Okay. This example is understand to all students. Yes, please. Bhai, when shares are issued for more value, premium will come na. So 10 rupees share issued for 11. So premium. This example understand or not? Communicate. Yes, note this. All cases understand. Yes, communicate fast. You'll note this. Example, second example, this is second example. Note this. See, when students will note the things, full screen will be provided so that content will be clearly visible to all. When I will explain, when I will discuss anything, then full screen is not available. I will be on this screen, available on this screen. Okay, but when you are copying or noting, I will not be available. Screen will be changed. Right? Copy this. चलिए solution completed now, right? Now next concept is calls in arrears and calls in advance. Okay, what is our next concept? Calls in arrears, calls in advance. Calls in arrears means what? When shares are issued, already I explained the procedure. First prospectus will be issued, thereafter application money will be received. Once application is sought out, then allotment will be done, then shareholder has to pay allotment money. Thereafter board of directors will make the first call, shareholder have to pay first call. Thereafter board of directors will make first final or second call, then shareholder has to pay final or second call. In this way amounts will be collected from the shareholder. So whenever board of directors are making the call, they will provide certain time limit. So within that time limit or time span, shareholder has to make the payment. If shareholder is not making the payment, he has not made any payments before the due dates mentioned to him, in that case will be called as call scenario. So call scenarios means board of directors have made the call, shareholder have to pay the money, but shareholder have not yet paid, even on due date also. So the amount which is due from shareholder, or even on the due date, shareholder have not yet paid either first call money or final call money or any money, that will be called as what? Call scenarios. So call scenarios means simply unpaid money, even on the due date he has not yet paid. Okay. Calls in advance means what? Suppose shareholder applying for more number of shares, but due to oversubscription, only limited number of shares allotted to him. Like in previous class we understand, shareholder applying for 12,000 shares, but company generally allocating or allotting 10,000 shares only. So it means on 2,000 shares company receive the extra money. So this extra money received will be adjusted in allotment or in calls. So extra money received adjusted in calls is generally termed as what? Calls in advance. So this calls in advance is what? Advance. In advance company has received the money. So all shareholders will pay this or no? Only those shareholders who applied for more number of shares, from those shareholders this advance money will come. Other shareholders, if they have not applied for more number of shares, generally there will be no advance money from those shareholders. That's why on calls in advance company has to pay interest, because in advance they receive the money now. Other shareholders are making the payment at later date. Whenever board of director call, at that time other shareholders are making the payment, but some shareholder applied for more shares, so their extra money is with the company. So this extra money which is received on application stage is with the company. So this is received in advance. So on this advance money, company has to pay interest. So this interest is generally called as interest on calls in advance. Similarly, if shareholder has not paid the money on first call or final call, board of director made the first call or board of director made the final call, and they have given the due date also. But on this due date also, if shareholder has not yet paid any money, that is in arrear, so that will be called as what? Calls in arrears. So on calls in arrears, board of director will generally charge the interest. So on calls in arrears, shareholder has to pay interest to the company. On calls in advance, company will pay the interest to shareholder. This is the explanation. Now, at what rate interest will be charged on calls in arrear, and at what rate company will pay the interest to shareholder? So this will be according to table F decided. So in Companies Act, the rate of calls in advance and calls in arrears will be decided and given in table F if company is not charging a particular rate of interest or not mentioned any particular rate of interest. It means in company board of directors will decide this rate of interest. Here, if that is not decided by them, table F of Companies Act we have to refer. So according to table F, we have to decide this. Okay. So now we are discussing about the journal entries relating to calls in arrears and calls in advance. So calls in arrears can be amount due from the shareholder, either on call stage or on allotment stage. Here, either on call stage or allotment stage, any amount due from shareholder is generally called as calls in arrear. Okay. So entry already we understand. Calls in arrear is debited, bank account debited to share allotment, calls in arrear debited, okay, bank account debited to first call. Like this we will pass the entry. So whenever there is a calls in arrear due, that is debited. When it is received, it will be credited. Okay. Entry will be calls in arrear to share allotment or call. When it is received, bank to calls in arrear. Okay. Understand? Right. So when first call money due, what entry we pass? Share first call to share capital. Okay. Suppose if calls in arrears are only at first call final call stage, there is no calls in arrears on allotment stage. Right? Amount can be due at allotment stage also. Amount can be due on first call stage also. Amount can be due on final call stage also. Because application money will be paid by shareholder in advance at the time of application. But remaining amounts, time is mentioned now. Whenever board of director will make the call, then shareholder will pay. Or whenever application is accepted, he will pay allotment money. So allotment money, first call money, final call money will be paid at later stages. That's why there is a possibility that shareholder can make any default also. If shareholder making the default, that default amount is called as calls in arrears. Understand? So generally, calls in arrears is debited to share allotment or call. If received, bank to calls in arrear. Suppose on allotment stage there is no calls in arrear. Paid application also, shareholder paid allotment also. So there is a default in first call, final call. It is not necessary bhai. Shareholder can make the default in allotment stage. Sometime application money also shareholder will pay. Allotment money also shareholder will pay. Default taking place at first call, final call. Okay. So when default is taking place at first call, final call, what is the entry? So first we have to write due entry. Share first call to share capital. Then receipt entry, bank account debit, calls in arrears account debit to share first call. Already this is explained. So bank account debit, calls in arrears debit to share first call. Here, right sir. Now interest. If there is a calls in arrear which is due from the shareholder, how much interest company can charge? Okay. So this will be provided in articles of association. If there is no provision in articles of association, we have to refer table F. If any interest rate is mentioned in articles of association, we have to follow that. Okay. But always remember, interest rate mentioned in the articles of association should not be more than 10%. Should not be more than 10%. Okay, right. So here 10% per annum, 10% per annum, or any lower rate also. If board of directors decided to charge 8% only, it can be 8%. They mentioned in the articles. If board of directors decided it will be 7% only, it will be 7%. If there is no provision in articles of association, then interest on call scenario percentage is 10% per annum as per table F. Okay, right, sir. So here it is underlined C. Interest on call scenarios, if there is no provision in articles table F of Companies Act shall be applicable, according to which interest will be charged at 10% per annum or at such lower rate, if any, as board may determine. So what will be the entry now? Entry for interest on call scenario will be outstanding interest account debit to interest. Here outstanding interest account debit to interest, because this is income for the company, expenses for the shareholder. So when it is income, entry will be outstanding interest to interest. Interest income na credit, outstanding interest liability to debit. So outstanding interest to interest. Then when it is received, bank account debit to holder, or outstanding interest. Outstanding will be cancelled. In bank, whatever amount is there, that is transferred. In P&L, interest is. This will transfer to P&L, is transferred to balance sheet when it is received. Okay. So entry will be sundry shareholder debit or outstanding interest debit to interest on call scenario. Next, when it is received, bank account debit to outstanding interest or sundry shareholder. Here, so this is relating to call scenario. Next is calls in advance. Calls in advance concept already I explained. Whenever at application stage any amount is received in advance and that amount which is received in advance from shareholder is not refunded, that will be retained by company, and that amount retained by company can be utilized for further adjustment. This further adjustment can be done at allotment stage or first call final call stage. When the further adjustment is taking place on first call final call stage, that extra amount received at application stage which is adjusted in allotment first call final call is called as calls in advance. The entry will be share application to calls in advance. Okay, when it is transferred, already I explained. Then when future, when we receive the first call money, final call money, whatever we received in advance, that is minus, subtracted, remaining amount, balance amount only we receive. Why one shareholder have to pay 2 lakh rupees, but in application stage he already paid extra rupees 10,000. So in future they have to receive 2 lakh rupees in first call. At application stage they paid 10,000 extra. So this 10,000 will be adjusted. So in future when first call is made, out of 2 lakh rupees 10,000 is already paid now. So balance 190 will be received. So bank account debit to calls in advance. This 10,000 is adjusted here. Okay. So calls in advance to relevant call. This is adjustment entry. Okay. When it is received, bank to calls in advance. When it is adjusted against call money, calls in advance to relevant call. Here, understand? So application, how much you received in extra, that is transferred to calls in advance. Thereafter, if it is received, bank to calls in advance. If it is adjusted with call money, calls in advance to relevant call. Okay. Then interest on calls in advance. Here also table F is applicable, and in articles of association, if rate is mentioned, that rate is applicable. If it is not mentioned, then we have to follow table F. So according to table F, 12% interest we have to pay to shareholder. How much interest? 12%. Okay, understand? So 12% per annum. 12% per annum. So interest on calls in advance will be 12% per annum. Here amount also they can pay, higher rate of interest also they can prescribe. Interest on calls in advance means company has to pay to shareholder because we received the money in advance, so we have to make this payment. That's why rate of interest is slightly higher, 12%, or higher rate also applicable. So here it is mentioned If company has adopted Table F of Companies Act 2013, then it is required to pay from the date of receipt of advance to date of making the call interest at such rate not exceeding 12% per annum, as may be agreed between board of directors. However, company in general meeting may sanction higher rate also. Here now entry will be interest on calls in advance to sundry shareholder. This is expenses, then sundry shareholder to bank, because company has to make this payment. So this is a outflow. This is what? Outflow. So I hope calls in arrears, calls in advance is understand to all. Will note this. Calls in arrears, calls in advance, whatever paragraphs I underline, note that. Whatever is not underlined with reading, don't need to write that. Okay, only underline and tick should copy. Anything which is not underlined or tick, no need to copy that. Okay. Will note this. Whatever underlined and tick, that only should note. Okay, start. Okay, calls in arrears, calls in advance is understand na? Note this. See, this is very important to note. Don't miss any point in MCQs वगैरह. Generally, they will ask these questions in MCQs, and in MCQs, they will ask the journal entries or interest rates. All this important stuff. Don't miss. Whatever I underline, please copy that. Well, I hope all students have noted this. Yes, interest on calls in arrears, interest on calls in advances. Understand now? Okay. Practical questions we will discuss when material is distributed to you, because lengthy questions, one or two questions only we have to solve in this topic. Reason is your paper is 50-mark paper, so there is no means chance, or there is no high probability key lengthy question will come from this topic. Small questions only examiner will test. Okay, lengthy questions will come from financial statement, banking, insurance, okay, or other topics. Clear? So after material is distributed, we'll discuss the practical questions. Means reason is you should have the material, na? So you should concentrate on values, all other information. Small questions we can discuss through your online resources also, right? Now next concept what we are going to discuss here is issue of shares for consideration other than cash. So far, when shares issued for cash, what will be the accounting entries we understand. Only issue when shares are cancelled for default, then again it is reissued, that we have not yet discussed. Only what we understand, when shares issued, an amount paid by the shareholder in different intervals, what will be the entries, that only we discuss. Okay. Now next, when shares are issued for consideration other than cash, means company issue the shares and company is not receiving cash here, company receiving assets or business, so that is called as what? Consideration other than cash. For example, I have one company. In my company machinery required. Now I am purchasing machinery from a vendor. Now I have to pay cash or not? Yes. But I am giving the offer to vendor. See, we need machinery in our factory for production purpose. So our company is a company of manufacturing certain articles. Okay. So definitely our company will grow. We have the confidence. So instead of giving the cash, we are offering shares to the vendor. If vendor is ready to take the shares as a consideration, then company will issue the shares and they will take the machinery. Similarly, when company want to purchase the business of another company or another form of business, then they will generally issue shares and they will purchase the business. So in consideration, they are not giving cash. In consideration, they are issuing shares and they are receiving the assets or business. So this concept is called as issuance of shares for consideration other than cash. Okay, this is understand first, please mention or message. Consideration other than cash point is understand or not? I am purchasing the asset and I am issuing the shares. My benefit is I am receiving asset, and the person vendor who is selling the asset, that person is not receiving any cash. That person is receiving shares. Okay. So that is called as what? Other than cash. Is company issuing the shares, but company not receiving cash. Company receiving asset, and the person who is selling the business asset, that person is not receiving cash. That person is receiving what? Shares. Yes, communicate fast. Your messages are not coming on the screen. This concept clear? Then I will proceed further. Issue of shares for consideration other than cash is clear or not? ये messages क्यों नहीं करते भाई आप लोग? Messages करना ना regularly. Okay, understand. See, when shares are issued for other than cash, other than cash means either company will receive asset or company will receive business. So in this case, three types of things will be covered. but in this topic only we are covering two aspects. One is when shares are issued to vendor, generally shares will be issued for other than cash. When shares are issued to promoters, then shares will be issued for consideration other than cash. So to whom whenever shares are issued, shares will be issued for other than cash means first to vendor, second to promoter. When shares issued to vendor, asset will come and there is no cash coming from the vendor. Okay, means vendor means supplier of the asset. Is supplying the asset, we are giving the shares. That's it. Similarly, when shares are issued to promoters, promoters are generally key persons of the company. Because of their efforts, company will started. So for promoters also we issue the shares for other than cash because of their services. Because of their services. Okay, these two things we have to cover now. Third is not there in your syllabus, so no need to discuss this. We are simply ignoring this. Okay, right. So when shares are issued to vendor, what will be the entries that we are going to discuss now? Please listen carefully. Suppose I have one business. ABC Limited. In this business, I have assets of 20 lakh. Liabilities of 5 lakhs. So what will be the net assets in this business? Net assets means assets minus liabilities. Assets minus liabilities. So 15 lakhs. Okay, 15 lakhs. The net assets. Now this business I am purchasing for 22 lakhs. This business I am purchasing for 22 lakhs. Okay, this first scenario. Second scenario, this business is purchased for 10 lakhs. Two different situations. One situation, suppose we purchase this business for 22 lakhs. Another situation, we purchase this business for 12 lakhs. Two different situations. So for these two different situations, we have to record the entry. And consideration is paid in equity shares. Consideration paid in equity shares of rupees 10 each. Okay. So first case, in my books when I record this entry, I am receiving assets or not from that person? Yes, because I am purchasing the business, so I am going to receive the assets. So in my books, assets will be debited. Assets account debit. So what are the assets here? 20 lakh. Then two liabilities. Liabilities also have to record because liability is also coming. Liabilities of 5 lakhs. Then how much purchase consideration I am giving? I am giving purchase consideration of 22 lakhs. So 22 lakh purchase consideration I am paying here. So this credit how much now? 27 lakhs. It means in my business, in this particular case, net assets of the business is how much? 20 minus 5, 15. And how much consideration I am paying? 22. Means the benefit which I am getting is 15 lakh. And how much consideration I am paying? 22 lakhs. So I am paying more or less? More. How much more? 7 lakhs. This 7 lakhs extra paid is called as goodwill. This is called as what? Goodwill. Okay, so here this 2 will be plus 5 plus 22. How much? 27. 27 credit, 20 debit. So debit, how much difference? 7 lakh. So whenever there is a difference in debit, that will be goodwill. And the concept already I explained. By net assets of the company is 15 lakh, but this 15 lakh rupees business I am purchasing for 22 lakhs. So I am paying 7 lakh extra. So when I pay 7 lakh rupees extra, this extra payment is called as what? Goodwill. This is case A. Case B. Assets account debit 20 lakhs. To liabilities 5 lakhs. Business purchase. In second scenario, we are purchasing the business for how much? 12 lakhs only. Okay. Now net assets of the company is how much? 20 minus 5, 15. This will be same. But how much consideration I am paying? 12 only. So there is a benefit or not? Yes. I am receiving assets worth rupees 15 lakh rupees. And how much I am paying the consideration? 12 lakh rupees. So there is a benefit to purchaser or not? Yes. So this benefit is called as what? Capital reserve. Benefit is called as what? Capital reserve. So here we have to write 2 capital reserve, 3 lakhs. These are the two situations. Either goodwill will come in journal entry or capital reserve will come in journal entry. Because when we purchase the business, either there is a benefit or loss. The extra amount paid means loss. Less amount paid means benefit. So when loss, goodwill debited. When benefit, capital reserve credited. That's it. Okay. So here, this is the journal entry C. Sundry assets account debit to sundry liabilities to vendor. Okay. To means if there is a difference, goodwill will come. If credit there is a difference, capital reserve will come. Means when net assets are more than purchase consideration, capital reserve. When net assets are less than purchase consideration, goodwill. Net assets means assets minus liability. Okay, note this. Okay, note this. Next entry, vendor to share capital is common by. This is simple entry. Now when shares are issued at premium, then premium will come. If this is issued at par, only vendor to share capital, right? Suppose in our example, assets how much? 20 lakhs. So here 20 will come. Liability is how much? 5 lakhs. So here 5 lakh will come. Vendor, in first scenario, how much we are paying? So 22 lakh. How much goodwill will be debited? 7 lakh. Then vendor to share capital. How much purchase consideration we are paying? 22 lakhs. 22 lakh. Share capital 22 lakh. Okay, right. 10 rupees share we are issuing for 10 only. If 10 rupees share 15 issued means premium will come. Okay. Okay, this concept is understand. Issue of shares for other than cash. Write this heading. Then write this to issue of shares to vendor, issue of shares to promoters. In this issue of shares to vendor, pass these 3 entries. Thereafter we'll discuss issue of shares to promoters. Okay, we'll copy this. First, this is understand or not important. Message here, I will check. First, this is understand or not, communicate. Okay, next entry simple by when purchase consideration is paid, simple. So here you can write vendor also. प्लस परचेज की जगह आप वेंडर भी लिख सकते हैं। ओके, फर्स्ट सिनेरियो, here you can write vendor. Okay, then next entry is what? Vendor to share capital. Vendor account debit 22 lakhs to share capital 22 lakhs. Main entry is this one. Here also same. There will change vendor to 12 lakhs to share capital 12 lakhs. Issue of share capital, right? This is working note. This is what? Working note. चलिए copy this. First, write issue of shares for consideration other than cash. In this, two situations are there: issue of shares to vendor, issue of shares to promoters. Write this two. Third, not required, is not there in the syllabus right now. Thereafter, issue of shares to vendor. Pass this entries: first, second, third. Means 1, 2. In 1, 2, two entries are there. You can write this goodwill capital reserve also. Okay, right. Copy this. Whatever underline with red ink, that only you should copy. Rest of the things not required. And whatever tick, that is copy. You need to copy. First journal entry, second journal entry you have to copy. In second, two entries are there, that also you have to copy. Okay. Paragraphs, theory paragraphs are not required. Oh, only one balancing figure will come, either goodwill or capital reserve. If amount paid is more, then what benefit company receiving? Means assets purchase less, amount paid more, goodwill. If assets purchase value is more, amount paid is less, capital reserve. Okay. So two balancing figures will not come in one journal entry, only one will come, either goodwill or capital reserve. Clear? Right. Okay, completed now. Is 3 entries completed? Right. So students have to note this example. Okay, this example students have to note. Assets 20 lakh, liabilities 5 lakh, net assets 15 lakh. So case A, purchase for 22 lakh. Case B, purchase for 12 lakh. Consideration paid in equity shares of 10. Two scenarios are there, A and B. So first scenario journal entries, second scenario journal entry, right? Copy this example. Okay, if this is completed, now I will explain issue of shares to promoters. Only one journal entry, two journal entries will come. First note this. Right. Next is issue of shares to promoters. Only one journal entry you have to record. Preliminary expenses or incorporations expenses or goodwill to share capital. Generally, you should prefer this in examination in MCQ question. Very simple. Only one journal entry will come because we are not receiving anything from promoters now. So it will be goodwill. Asset side goodwill, liability side share capital. So goodwill account debit to share capital you should write. Not required. Okay. Write this journal entry. Complete this. Issue of shares to promoters. MCQ question important. Entry very simple. Goodwill to share capital. Okay. Because we are not receiving anything from promoters because already they are giving the services to company, so we are not receiving any cash. That's why entire amount of share capital what we are issuing to promoter is what goodwill. So you can write incorporation expenses, preliminary expenses, but in examination goodwill you should prefer in MCQs. Actually, complete this. Issue of shares to promoters, entry goodwill to share capital. That's it. In next class we will start the other concepts like when shares are forfeited, when shares are reissued. Very important discussion. The next class we are going to start that concept. Okay. Thereafter we'll solve practical questions on that step by step, gradually from beginning to end. All will be compiled in one question and we'll discuss that also. So this is noted and understand. In today's session, whatever I explained, everything is clear. Or any student having doubt query, please communicate and message. Yes, all of you. Today what we have done so far, that is understand. Any student having doubt query, communicate, message. Now I'm closing the session here only. After your message, I will check any student having doubt query or not. Just do it fast. Nobody is having doubts, huh? I'm checking on the screen. Nobody has sent the message, means everything is clear. So here only we'll close the session. Next class we'll discuss the further aspects. Good day. We'll meet in the next session. Okay, right. We will meet in the next session. Good day.